So we're not actually very focused on any kind of industry or sector. We're more focused on revenues and metrics. We actually come from M&A backgrounds. So our idea is basically that if a company has revenues and the metrics are right, then it must mean that the team and all the other things are also right. At least this is the theory. Of course, you need to look at all the other stuff as well. You need to have like a complex system. We actually have a scoring card that we use that has at least 10 different perspectives that we look at, and then we judge based on that. And then the other thing, what we like is cultural proximity. So what we believe in is that actually the companies and the founders that run the companies should come from the same region as we do, and then we actually understand each other way better. We're actually focusing on this diamond-shaped region. So it's starting with Austria, going up to Finland, then until Russia, and then going down until Israel. So again, what the common denominator with these countries is that there is cultural proximity. Of course, we're missing on some of the moonshot ideas, but with moonshot ideas, the problem is that you can actually much easier just go wrong than go right. So our approach is more of a downside protection, sort of a risk management approach, which sort of comes from traditional private equity and more like portfolio management than like traditional VC investing. So we're looking at our portfolio as an asset manager would, and we're just protecting some of the downside. We believe in globally focused companies, and there are a couple of reasons for that. The first reason is that if you're globally focused, your downside is sort of protected by the currency mix that you're covering. And then the other reason is that developing something for a small market, even if you have some traction, there is a limit, so you're capped on the upside. And if you shoot for larger markets, it will just help you with the number of opportunities. It's just a much better. I think regional trends is that software rules. So the majority of the companies, what I see, are software companies, and this is also the case in our portfolio. So the majority of the companies are software companies, mostly focusing on software as a service. And we also have this peculiar type of B2B2C companies. So basically B2B companies selling for businesses that at the end sell for customers. We just believe that it's a good model because it actually kind of reduces our risk, but still doesn't really lose touch with the end customer. Currently in the Hungarian market, they're just more Eskimos than animals, so it's just it's just basically a funny place to be as an investor at the moment. I think the big problem with a lot of capital is that actually it makes entrepreneurs a bit lazy. So they start having less traction and just expecting more from the VCs, and that's not very good. But on the other hand, it also has an educational effect. So all of the equity culture that is missing from the post-Soviet countries is actually sort of developing in some ways. I worked for a Polish company myself, a company called DocPlanner, just raised $80 million. I think Poland has a lot of potential. So it's not like Polish entrepreneurs are just developing for Poland. Like if you look at DocPlanner guys, they came from a very regional player to be a very global player, basically with an M&A acquisition. They acquired their largest competitor worldwide. So now they're worldwide the biggest subscription or scheduling software for doctors. So Romania is the entrepreneurs there, they're just pretty cool. So they actually have to fight this situation where there is not a lot of capital available, or traditionally there was not a lot of capital available. Now the situation is changing slowly. And I think this need that they have, or this kind of pressure that they have because of the lack of funding, actually makes them more creative. So they need to push for more, they need to just reach more. I think there's a lot of hidden potential. Again, the same thing with Romania. Traditionally founders had to go out and raise funds from elsewhere. There is a large success story in Bulgaria already with Telerik, which was sold a couple years ago. So there is a positive sort of example. And what the good thing about it is that this give back culture has already started. So the Telerik founder guys, they actually do the angel investments and launched funds themselves. Ukraine is the true underdog. So it's basically the company where there's a lot of software talent. There are a lot of smart guys, and there's not a lot of capital that is being invested in Ukraine. So that's why people that want to make it big, they actually have to leave the country. So this is what we see a lot. But even local entrepreneurs, they create like amazing startups. Turkey is a very interesting country. Unfortunately, it had some setbacks in the recent months, years, due to currency devaluation and all this other adversity that you guys faced. But I believe in the entrepreneurial talent coming out of Turkey. I think that's the message for Turkey as well, and that's the message for all the people in Central Eastern Europe, that this actually will make you stronger, and you'll be much better than all these other guys that have everything at their fingertips, because you actually had to fight harder, but will be like a better company after all.